This is Fintech Fair Play, the platform where we analyze how money really moves in the modern world. The numbers I'm about to share will transform your understanding of the UK financial market. 70% of British ISA holders are locked into traditional banking systems. They're paying excessive fees, they're accepting lower returns, and most importantly, they don't even know it. Let's establish the current state of the market. Traditional banks have dominated ISAs for decades. They've built their business models on customer inertia. They've profited from complexity and confusion. But today, everything changes. Let me show you something that will reshape the entire market. Lightyear is offering a 4.8% AR interest rate. This is 10 times cheaper than the market average over a 10-year period. Let that sink in. 10 times cheaper. And it gets even more interesting. Our research shows something crucial. 97% of cash ISA holders prioritize interest rates above all other features. Yet they stay with banks offering significantly lower returns. This paradox defines the current market, and it reveals a massive opportunity. Here's what's happening right now. Lightyear has secured $35 million in venture capital. They've expanded into 22 European markets. They've partnered with BlackRock for money market funds, and they're offering zero withdrawal penalties. This is a coordinated assault on traditional banking's weakest points. The timing here is precise and deliberate. FCA authorization, September 2024. Market entry, just before the tax year end in April 2025. This gives them maximum impact during the peak ISA season, when most Britons make their investment decisions, when the market is most attentive. Let's break down their offering in detail. First, the 4.84% AER interest rate through their Vaults product. Second, no withdrawal penalties. Third, no minimum deposit requirements. Fourth, complete flexibility with deposits and withdrawals. Fifth, FSCS protection for customer security. This eliminates every major friction point in traditional ISA products. Now let's look at the competition. Traditional banks rely on brand recognition. They count on customer inertia. They profit from complexity. But their model has three critical weaknesses: high operational costs, legacy technology systems, and inflexible product structures. This disruption will create ripple effects across the entire industry. Traditional banks will be forced to respond. They'll need to either match these rates or risk losing their most valuable customers. But here's the crucial point: their current cost structures make this nearly impossible. For the average ISA holder, this means three things: higher returns on their savings, more flexibility with their money, and significantly lower fees. Let me put this in perspective with real numbers. On a £20,000 ISA investment, the difference in returns over 10 years could be substantial. We're talking about thousands of pounds in saved fees. This is just the beginning. The UK fintech sector is evolving rapidly. More players will enter this space. Competition will intensify, and the real winners will be the customers. But several critical questions remain. How will traditional banks respond to this threat? What happens when their 70% market share starts eroding? Can they adapt their business models fast enough? And most importantly, what does this mean for your money? You need to understand these changes. You need to evaluate your current ISA provider. You need to calculate the real cost of your investments. Because the market won't wait. These changes are happening now. The evidence is clear. The UK ISA market is being transformed. Traditional banks are facing their biggest challenge yet, and customers finally have a real choice. This is Fintech Fair Play. Stay with us. Your wealth depends on it. Subscribe for our next analysis. We're just getting started.